So, what I have done the last 2 years, I started my account with 500 euros. The majority of people, they believe that I'm faking numbers. I know I'm saying like bullshit and all this kind of stuff, because what I have achieved is unbelievable. And I'm gonna prove it to you that this can happen to everybody. Everybody that has a proven strategy, a proven system, and also can keep a track of his data, has discipline and patience, can achieve unbelievable results. And this is what happened. I started like this account with 500 euros. This is my deposit. Actually, I withdraw like the amount that I deposited just for fun. I started on the 11th of December of 2024, and I deposited $500. This is my broker, and this is my real account right here. I'm gonna put this MyFX book link under this video, so I made it public so you can see and track every single data and my performance while you're watching this video. And this account, actually, it was meant to be like a challenge. I would love to prove to people that everything is possible. This is why I deposited $500 and I didn't deposit 5,000 or 10,000. The thing is that I wanted to show people what is possible. Sometimes I see this data and I say it's fake, but it's not. It's the reality. It's the compounding effect of a very good trader. My main goal is to compress these 11 years of struggle that I have been into the market, so you understand totally what you have to do and what you have to avoid. You know you can trade. You have proven it. And the thing is that in every single stop loss that you have, in every single losing strike that you are facing, the past is coming again into you, and you are wondering if you are a good trader or you are not. I have been through everything. I started trading signals. I started learning a lot of strategies. I have been through every single strategy that you have seen online. SMC, ICT, liquidity, value gaps, every single thing. And I know what works because I have tried it all. And when I'm saying I have tried it all, I don't mean that, okay, I tried it for a week and now I know if it's working or not. I have tried every single strategy by journaling it, keeping data for months. And currently, I know that I can trade. I know that I have the results. How? By my data. So let's get into the course. And let's start from break even. And let's understand why 90% of traders fail. The myth is that you maybe need a better strategy or more complex strategy than this one that you are using. Maybe you need more time on the screen because your subconscious mind says, if I spend more time in the screen, I'm gonna make more profit. Maybe I need to make more trades to make more money, because I'm not taking a lot of trades. I miss a lot of opportunities. But the reality is that you don't need a better strategy. You need a system around your strategy. You don't need a more complex strategy. You need to keep it simple. Like one of my mentors, like back then on the 2019, it was KISS, keep it simple, stupid. And he's right. Currently, I can understand him. You don't need more screen time. You need average 2 days per week. What are you talking about, Panos? 2 days per week? Who is taking 2 days per week? Millionaire traders that I know, they're taking like 2 trades per year. You don't need more trades, because more trades are not equal to more money. You need 2 to 3 A+ setups. So first of all, I need you to focus on that, because a lot of people believe that the strategy is the system and the system is the strategy. That's not correct. The strategy is something that you are using, let's say, into the technical analysis. For example, you're opening trading view and you're using a strategy. After that, we have to put this into a system. What is the system? The system contains 4 major things. The first thing is the risk management. So if you're having, for example, a 62% win rate, you have to analyze your risk management to withstand a 38 chance 38 trades of loss, okay? You don't know if this 30, 35, 38, 20, 25, 15 trades will be in a row. That's the thing in trading. The majority of traders, they believe that they're having 1, 2, 3, 4, 5 stop losses, and after that, they might have a win. Maybe you will know like how many trades there will be in a row, but after 500 trades. When you know that, you can properly manage your risk. For me, the best thing that you can do is risking 0.5% in every single trade for 6 months. When you're risking 0.5% in every single trade for 6 months, by taking 2 to 3, like at the most, trades per week, and keeping the data for 6 months to gain confidence. This is how the game is being played. Like the game is to stay into the market as much as possible, not to make as much money as possible in a short period of time. I'm gonna show you something that it's really interesting. So I started on 11th of December with $500. The first month, the December, I made 2.9K. So January 2025, my account was 3.5K and I made 10K. So my account on February of 2025, it was 13K. And on February, I made 33K. So in after 4 months, my account, it was just 44K. And after 11 months, it became $1 million. The difference is huge. But by compounding like the knowledge and like the patience and keeping like my setup clear, my risk management proper. Of course, in this challenge, I was risking 20 to 25% per trade, 1 trade per week. But by keeping that with patience and discipline, I made like $1 million. How the system works, I need to know in which day I have to analyze the market, what time I have to analyze the market, which pairs I have to have into my watch list. Okay, all this kind of data is really, really important for the system. Why? Because they are putting limitations into the trader. If we don't have limits, we're gonna overtrade. We're gonna feel FOMO because our brain is trained when we open tradingview.com to find opportunity to trade. Into the system, you need days, you need specific time of opening. I'm analyzing 5 pairs. I'm not analyzing correlated pairs. Positive or negative correlated, I don't care. I'm analyzing $1 pair, 1 GBP pair, 1 euro pair. 5 is the maximum of the pairs that I'm gonna analyze and check on my watch list. Do you know why? Because if I put like 20 of the Forex pairs, I'm gonna be overwhelmed and I'm gonna be tempting into analyzing like more and more and more, and I'm gonna overtrade. I'm gonna lose my account. I'm gonna trade again, trade again. Okay, so I'm trying to put limits from day one. It doesn't matter if I'm trading with $100 or with 1 million. As I said before, it doesn't matter what day it is. It doesn't matter if there are news. It doesn't matter if there are CPIs. It doesn't matter anything. The only thing that it does matter is based on the fundamentals is one thing. What is happening in the world? This is the only thing that I care about. Okay, macroeconomics. Okay, apart from technical analysis strategy and my system, for example, let's say that the war stops. Okay, what does that mean? Peace is coming to earth, thank God. Okay, what does that mean? It means that people will not be afraid anymore, that the economy will start rising again. So what does that mean? What is this? You have to understand a few fundamental stuff about macroeconomics if you're gonna be a trader, a professional trader. You need to understand that the stock market is gonna go up because more people are gonna spend money and gonna make investments. Like that the US oil is gonna go down. Why? Because like there's no high inflation, high demand from oil. Some things that they are important, okay, for the bigger picture. I'm using macroeconomic to see the bigger picture. I'm not using a CPI to check or trade into the 1 minute time frame, but with buy stop and sell stop. This is what losers do. What the 95% do, they listen to Trump tweets. They're using like the Truth Social headlines. Okay, they are chasing NFP predictions. They trade interest rate speculation. They react like emotionally to every fucking release. You know, social media like have done like a really bad job into this thing because you can see into a real like Powell talking and saying good afternoon and like the price drops and traders like hitting their heads. No, this is not trading. This is gambling. The 2026 way about fundamental is this, okay? Fundamental set the direction, your bias, okay? It doesn't matter about the IG sentiment or whatever you're using. Maybe the dollar yen is gonna break the high of 162, okay? And they're gonna say, oh, 92% of traders, the retail traders are short. It doesn't fucking matter because if it breaks the highs, it will continue going up. 164, 164. Okay, and then you're going into the IG sentiment and you see, oh, 72%. Why there are less? Oh, maybe because they got liquidated. So IG sentiment is bullshit, okay? So you have to follow the trend because trend is your friend. So let's talk about the Moore strategy. I hope that this strategy will help a lot of traders, okay? Because the majority of traders are out there, they're just very good YouTubers and they're like crap into trading. So I hope this strategy, Moore strategy, will help a lot of you. The first thing that you have to identify is the higher time frames, daily and dates 4. When I'm saying higher time frames, you have to identify the trend, okay? The higher time frame, it has a bigger liquidity into every single candlestick, okay? So when we can identify into a daily time frame, for example, that we have a high and a low and a lower low, and we are looking into identifying into the previous areas, let's say into the previous lows, a lower high, this is an indication of a downtrend, okay? Because we have a high and a low, a lower low, and here we can identify a lower high. Okay, we're looking in these areas, we are looking into these time frames to confirm, to identify actually, that we have like a proper trend. In this pair, GU, we have a downtrend. The second thing that we are doing is lowering the time frame. I am using the H1. So now, look at this because it's important. We're looking for an entry to short the trade. But we're not gonna short into the daily time frame because we have to put our stop loss above the previous high. So we have to put the stop loss around here. So it will gonna reduce our reward. So what we are doing, we're going into the H1 time frame. We're deleting everything as long as we took the confirmation of the trend. And we are marking with 2 POI zones, point of interest zones, the lows, 1 and 2. We're waiting for 2 lows to be broken, okay? So we're waiting for 2 lows to be broken. Let's say we're breaking here. We're breaking also the EMA. That is the next step. We're waiting for 2 supports to be broken when we're looking for a short, and we're looking for a break to a key level of an EMA. After that, we're waiting for a retest. I'm just setting an alert, let's say here, okay? I'm waiting like for the alert to be hit. When the alert will be hit, I don't know, maybe it will be at night, maybe I will be on the gym, maybe I will be at work, it doesn't matter, okay? I'm analyzing the market one day and I'm setting my alerts. And after that, I'm doing like my rest of the stuff. I'm running my business, I'm spending time with my family. I don't care, okay? I'm being alerted when the price breaks the EMA and the 2 lows. And then I'm setting a sell limit. My sell limit here and my stop loss above the previous high. I'm using like my reward into the lower lows that I had into the daily time frame, okay? Of course, I'm monitoring my trade that I'm gonna show you, like how you can do it properly into the next steps. But what I did here, I maximized my reward. Okay, this is really important because the majority of traders, especially the ICT guys and the SMC guys, what they do, they're trying to minimize the stop loss, maximize the take profit, and every single trade hit the stop loss. And when they're winning, for example, one trade out of 20, they're break even. Or other people, other traders, let's say, what they do, they are risking a lot, but they are using like maybe 1 to 1. This is a mistake. The winning trades are gonna make you rich. Okay, so step one, okay, you have to open the daily charts. You have to have a clear like vision of the higher highs and higher lows. If you have a higher highs and higher lows, this is bullish. If you have a clear lower lows and lower highs, you have a bearish momentum. If it's like, for example, it's messy and you can understand if you have a like higher highs, higher lows, and you have a consolidation into one pair, just skip it, okay? Don't pay attention. Step two, confirm on H1. You have to have the same synchronized bearish momentum if you wanna short, or bullish momentum if you wanna go long, into the two time frames, daily and H1. H1 or H4, doesn't matter. But in two time frames, you have to have the same confirmation. For example, align with the daily, the H1. Are they aligned? Yes, continue. If they have an opposite direction, let's say on the daily, you're looking, for example, in this example, you're having like a lower high, lower low and lower high, and the price into the H1 is moving higher highs, higher lows, higher highs, just skip it. Or in this example, wait on the H1 to break the lower lows, two actually lower lows, breaking the EMA and then retesting, all right? Then just get into the trade. Step three, confirm the trade, okay? Identify the most recent key levels. What is the most recent key levels? The levels that I just showed you, the majority of traders, they may be impatient and wait for pay attention on this one. Wait for this level, support level to break, then the price hit the EMA, continue moving up as a retest to the upside, okay? This is really important because you need to pay attention how the breakout like happens. If the breakout breaks 1, 2 support levels and the EMA, it's a confirmation for a short. Okay, it's a confirmation for a short. This is why my POI is here. So if we have a break, the moving average will break as well. Okay, because the moving average continue growing and moving while the candlestick, the 1 hour time candlestick is moving. Step 4. Okay, wait for the retest. As I told you before, so when I'm using alerts, when I'm being notified after the breakouts, break of the lows, break of the EMA, in this example, I'm just putting like a sell limit. Because if you are using like huge lots, huge standards, for example, I'm using 100 lots, I don't want to get like into a slippage. So I'm using like a sell limit or a buy limit and I'm all right. Step 5, you have to place your stop loss on the previous, of course, high when you're selling, when you're short, and on your previous low when you're buying. So you have to place your take profit, and this is important, aiming when you are a beginner for 1 out of 2 RR, especially when you're journaling your data. 1 out of 2 RR in H1 time frame, it has like bigger probability, 70 to 75% to hit like 1 to 2 RR. Okay, sometimes when you are catching the pair from the start of the trend, you might have like 1 to 3, 1 to 4, 1 to 5. But if you are a beginner using this strategy, aim to 1 to 2 RR, okay? For better result, to track every result down. And after that, you can like increase your reward. I want to thank you and tell you congratulations, because if you have seen so far, you have like a high probability to become a professional trader because you really want it and you have patience. So if you want like my help, just book a call and me and my team will come in contact with you. And now, risk management, number 6. You need the risk management as an ally. It's not your enemy. It's super important. You have to understand that your strategy, the strategy that I'm telling you right now, if you're using it correctly, if you have all the confirmation, average 100 trades in the next 7 to 8 months, you are gonna win 65%, let's say, of the trades. You need to be prepared for the next 35 trades to be in a losing strike. You have to set your risk management to at least suffer 10 stop losses in a row. If you cannot suffer 10 stop losses in a row, you're not risking properly from your account, all right? So you have to risk 0.5% to 1%, maximum, okay? Maximum, because you don't know when this losing strike will appear, okay? It's a probability scenario. Always you have to be prepared for the worst case scenario. Let's talk about the 2 tier of risk system. So the first one is the A plus setup. On the A plus setup, I'm risking 1%, okay? When I'm doing a challenge, because it's a challenge, I'm risking more. But I'm super disciplined, I'm super patient, I know exactly what I'm doing. And if you're a beginner on this strategy, on the A plus setup, that everything is confirmed, you have to risk maximum 1%. So first, entry to a trend reversal. Secondly, the full 4 to 5 Elliott waves move. That actually the 4 to 5 Elliott wave move is when this is actually happening. Let's say we have a breakout of a low. This is the 0 to 1 move. This is the 1 to 2. This is the 2 to 3. And this is the 3 to 4. So this is the continuation of the 4 to 5 movement based on the Elliott wave that gives to the trader the bigger reward based on the risk percentage. So this is my job as a professional to, first of all, save your account. Like I have to guarantee the safety of your account. And currently, by telling you in the A plus setup risk 1%, I'm guaranteeing the safety of your account. I know that you are not gonna lose your account. No, there's no way, okay? So as you are getting confident with your strategy on your real account, not the funded account, real account, you can risk even more. But I have to take some precautions because I don't know who is watching this video. So, and third, targeting 1 out of 3 when you're like on the A plus setup, when you're focusing on the 4 to 5 movement. You can get your reward like up to 1 to 3, risking 1, getting 3, maybe sometimes 1 to 4. This is really important because if you're having a losing strike and let's say you're losing 5 to 6, 7, 6 trades in a row and you're losing like 1%, 1%, and you're losing, let's say 6%. When you're getting like into an A plus setup 1 week and after 3 weeks, another A plus setup and you're getting 1 to 3 and 1 to 3, you're getting all the loss like by winning 2 trades. So it is really important to focusing on the A plus setup. And also the majority of the trades that you are taking is super important. When you're taking 1 setup per week of every, let's say you're analyzing the market every Tuesday, Thursday, so you are analyzing average 5 currency pairs. So when you're choosing 1, you have to be strict. You have to be strict with the confirmations. You have to be strict with the rules. You have to put limits. So you're skipping the pairs that are not A plus setup. You're not rushing. It's not a game that you have to rush. It's a game that you have to be patient. So you're getting 1, you're choosing 1. So this one, it's like, it has bigger probability to be A plus setup. So if it's A plus setup, you have like a bigger probability of a bigger reward and a bigger probability for a winning trade. So if it's not an A plus setup and it's just a continuation movement, if I was you, I would risk 0.5%. What is the continuation setup? Like a pullback, retesting to the existing trend. So we have to take the continuation movement. That it's good, but not the perfect confirmation because we're looking into the reversal of the trend. So number 7, and let's talk about the schedule. We have to set boundaries, okay? We have to eliminate the noise. I want to give you the key points to eliminate noise and set boundaries. And I will start with the 2-day analysis rule. You have to dedicate only 2 days per week to analyze. Why? Because you're setting boundaries, you're setting limits, and you have to put the market into your life. You don't have to put your life into the market, because you're creating chaos. And when you're creating chaos, it's 100% probability to lose. So let's say that you're analyze the market Tuesday and Thursday. Analyze, not trading. Analyze. You're trading when you have the alert and the notification. You analyze Tuesday and Thursday. So the markets have settled from Monday's volatility, and the peak liquidity and the clearest bias of the week are like on the end of the week. So Thursday for me is the best day of analysis, but we have to put one more day. So sometimes the peak of the liquidity starts from the beginning of the week. So you have to put maximum 5 non-correlated pairs between them on your watch list. Okay, 2 to 3 A plus setups per week. Maybe sometimes you will not find these kind of setups because the market is moving like a few weeks, and for the next weeks it's like pulling back and retesting, so it has lower liquidity, and you'll not be able to find. So this is not an actual rule. A rule is that you have to check and analyze the market only for specific confirmations and specific A plus setups. If you don't find that, do something else. I don't know what. Go for a trip, okay? You have to set boundaries into your personal life as well. Only trade on high volume sessions. This is super important. Not that much to trade, but to analyze. And why is that? Because my system talks about how can you can avoid the fake confirmations and the fake breakouts. So it's really important to analyze the market on the high volume sessions, so the breakouts and the retests become reliable. So for me, this is the best session to analyze the market. New York overlap 1 to 5. This is the maximum liquidity windows and ascent session. Number 8, without a journal, you're flying blind, okay? So most traders review only their P&L. That tells you nothing about why you won or you lost a trade, or maybe your account. So the main thing is that you have to understand the main data points that you have to collect. Okay, you have to collect the date and time. You have to collect, of course, the instrument. For example, your USD. You have to collect the direction. Okay, you have to collect the entry and the stop loss, also the take profit. You have to collect the data of the actual exit, if it's like before hit your stop loss or before it hits your take profit, or maybe you moved your stop loss so you didn't manage your risk. You have to collect your result, and after that you have to check the type of the setup, okay, and also the emotional state. For my students, because I couldn't find something that let's say comprehensive, like something that contains all these details that they're telling us a lot about how the trader reacts in real time. I couldn't find it in my FX book. I couldn't find it into the, I don't know, TradeZilla, FX Blue. So I created one. That can show you, here the dashboard is in Greek, but it can show you exactly what time, what day, I don't know what, for example, what direction you took, what is the status of the trade, if it's open, if it's closed, with the entry price, the stop loss price, take profit, the lot size that you used, the P&L after that, the entry time, the exit date, the exit time, the setup strategy, if it's like breakout, trend follow, break and retest, double top, double bottom, the emotional state. If you were like calm, if you felt FOMO, revenge rate, fearful, greedy, whatever it was, you have to write the notes. I was feeling like blah blah blah, and of course something that is really crucial, I need a screenshot of the analysis, okay, before and after. That says a lot about why you took a trade. This is the easy thing. If you cannot collect all this data, you cannot win in trading because you're flying blind, as I told you before. The hard thing is that you have to review these metrics every 50 trades. And to take 50 trades with my strategy, for you to be disciplined, patient, and consistent, you need at least, I don't know, 8 to 9 months. Yeah, this is hard, okay? It's hard to take 50 trades in 9 months. It's really hard because you have to be patient. You have to wait for the correct A+ setup. So minimum 100 trades before any conclusion about the strategy. So that means that the average trader has to spend mainly a year into one strategy. Then you can like conclude if this strategy works for you or not. And if you don't have this data, that the 98% of the traders, they don't have this data because they're not patient enough to keep this data. Maybe they're journaling for a month or two, and that's it. You don't have an edge, okay? No data, no edge. That means that you cannot understand what is working and if this is working for you. So I traded for 4 years, okay? Looking back, a good loss like 100K and main 10K, but for example, I only remember the 10K. So I really believe that I'm a profitable trader, but I'm not. I'm not telling the truth to myself, and my brain just blocked the pain, and you know, I felt confident, but I had no data. The other thing is that I'm gonna save some time and I'm gonna back test everything through like this bullshit replay instrument that I use like into TradingView or other like bullshit websites that are selling you crap. And I'm gonna back test everything and I'm gonna check if this strategy works properly by doing that like a full week or a weekend and see the results. No, it doesn't work like that. Trading doesn't work like that. Why back testing doesn't work? Because you have to try this by being patient, by being disciplined, by being consistent into daily basis, into your main life, that you have problems, you have to go to work, you have to face your girlfriend, you have to face your wife, you have to play with your kids, like every day. So your brain, it will find a way to be patient if you really want it, okay? It will find a way to make you disciplined if you really want it. So backtesting doesn't work because it does save you time, but it doesn't give you accurate data, okay? The accurate data, you are taking them through time. You need a sample through time, okay? Number 9, actually, to be honest, I have been banned, my mail, my number, my name from 3 prop firms, okay? Because I'm really good trader and I was making a lot of money. And I was making a lot of money through this way that I'm gonna tell you right now, okay? I'm the fear of prop firm. I have tried like averagely, let's say 12 to 15 different prop firms. 5 or 6 of them, they haven't paid me at all. It was a scam. And actually I found them through the prop firm maths, okay? But 5, maybe 6, they didn't pay me at all. I make a lot of money from 4 to 5 prop firms. And after that, they reduced my leverage. They banned my account after a while. And some of them, they told me that I breached like a rule or something, and they just banned my account. So I'm telling you that this way that I'm making money from prop firms, it does work, but you have to follow it exactly as I'm gonna tell you, and also find a prop firm that it's legit, okay? So, and also start like with not a big account, like take like a 50,000 account, something like that, not go to 200 or maybe 500,000 account if they have. Go with a small account. Don't make a lot of money from the first payout. I mean like 20%, 25%. So spread risk, okay? This is the main concept of the prop firm and scaling. Spread risk across funded account instead of betting everything on one. So let's say that you have 2 accounts, okay? On the first account, I'm using my strategy in my system. I'm analyzing the market on Tuesday and Wednesday and Thursday. I'm analyzing the market only on the opening of New York session. I'm waiting for A plus setup. I have 5 pairs, different pairs into my watch list. I'm waiting for a trend trading or for a reversal, blah blah. And I'm doing this on the first week. Okay, I just found an A plus setup. So I have 100K account 1, 100K account 2, the same name.Maybe you can use different names. That's even better. So I'm trading on one account the first week. So let's say I'm making like 3%. I'm risking 1%. I'm winning a trade. I'm making 3%. The second week, okay, I'm trading on the second account. Second week, A plus stop. Okay, I'm risking 1%. Boom, stop loss. -1. It's okay. I'm stopping trading. Third week, I'm going back to the account, to the first account that it's 103,000. Okay. A plus setup. Boom, stop loss, -1%. That's okay. I'm 102, 100. Like I have 2% growth. I'm okay. Week 4, I'm going back to the second account. A plus setup. Boom, 1 out of 4. Okay, I'm getting 4% gain. I have lost 1%. I'm plus 3%. Okay, I'm doing that again and again. And when you're like experienced with strategy, experienced with what you're doing, you can make like multiple accounts within multiple prop firms. The only thing that I'm not doing that anymore is because I'm trading in $1 million account. When I want to trade like professionally, I'm putting like 50,000, 100,000, or I'm just trading on my main account, $1 million account. So I don't give a fuck about prop firms anymore because they're bridging me all the time. I'm spending time and okay, I'm a professional trader. I'm not a fucking kid. Okay, so why it works? Okay, when the losing streak comes, because the losing streak will come. Maybe we'll have like 3, 4, 5 trades in a row and we'll be lost. You end up with 2 accounts at 4 to 5% drawdown sometimes, and instead of one account being blown, the diversification keeps you in the game. Okay, so start with 2 accounts, do exactly what I said. When you're feeling experienced or when you made your first 1 or 2 payout, you can reinvest this money making that you made and buy 2 more accounts, and then boom, you start gaining capital, putting the capital into like a real account. You start making money with no rules, with no fucking bridging, nothing. So to make all this happen, you need the 40% of a trader that he possesses. Okay, 60% is strategy in the system, and the 40% that it's really important is the psychology of trade. Most traders who lose, they don't lose because their strategy is wrong. Okay, they lose because they cannot execute it consistently. This is really, really, really difficult, guys. Okay, this is why I'm telling you back testing doesn't work. I want to see a trader executing with consistent execution every single week for months, the same strategy in the same system, and then he will grow. That's for sure. Okay, every violation of the system has a cost, the impatience, okay? Entering early before all confirmations, or maybe fear, moving the stop loss to avoid being stopped out. I know, I've been there, okay? The greed, okay? Closing winners early before your target. This is really, really bad, okay, for your trading career. You have no discipline. You're trading on non-analysis days. You are trading during like taking a shit. You're trading during you're watching a movie and it's like a fucking boring movie with your girlfriend. You're trading because you want a dopamine. There's no discipline. You cannot achieve anything without discipline, okay? Or you're being too emotional, because some people, they're being too emotional. And I totally understand that, okay? I was not too emotional. But I do understand emotional people because I have faced a lot of people that they were too emotional, okay? Revenge trading after a loss because you want to make your money back because you're crying and you cannot handle the pain. I know, understand. What is the challenge, okay? Here's the challenge. Challenge is the FOMO, the fear of loss, the overconfidence, revenge trading, analysis paralysis, okay? You have been through that, maybe you have heard about these things. I would definitely make another video about this because, oof, boy. But currently, I'm gonna give you the challenge, I'm gonna give you the manifestation, and my point of view, I'm gonna give you the solution. So, the challenge is the FOMO. Okay, what is the FOMO? The FOMO is coming because I'm feeling behind. I'm feeling that I'm gonna miss the opportunity to make money, and this fucking opportunity will change my life forever. I totally understand. Entering late because you're feeling that you lost the opportunity and you're just entering, well, it will go down more, Bitcoin will go up more. But the problem in depth is that you hate your fucking reality and you want to change it as fast as possible because you are a fucking baby, you're not disciplined. But everything will change if you follow your system and trust your system, and you truly understand that time is passing by really fast, and the next setup and the next fucking opportunity will come, maybe in 5 days, a week, 2 weeks, but it will fucking come. And when it will come, and when you will find an A plus setup, and you have all the probabilities with you to win the trade, this will happen fast, and this will make you money, okay? Anything apart from that will cost you money. So you're feeling like that you're missing an opportunity to make money, but when you're into that, like trap, you're actually losing money and going 2 steps back. So don't do that. So the fear of loss. The fear of loss is actually pretty similar with the fear of missing out. It's like moving stops. Like, I don't want to lose a trade. Like, literally, I don't want to lose a trade because this amount of money is really important for me. And I didn't think about that before I execute the trade. And I was thinking only the best case scenario. So I'm moving my stop because there is another resistance in daily there. And maybe the price will go down after liquidating, like all traders. Feel the trade that you're looking right now to open, going like directly to your stop loss, and you're risking like 5K. How do you feel? Fear. I feel angry. Feel sad. Okay, then fucking reduce your stop loss. Go like to 2 fucking K. How do you feel? A bit like, okay, reduce more. Like, reduce your risk. Go to $500. Let's go. Okay, go to $100. Oh, all right. I don't care, but I will win like less money if I'm gonna risk $100. That's okay, motherfucker. Okay, that's okay. That's something that you have to do and try it on till you feel comfortable. Okay, so when you're gonna feel comfortable, when you're gonna feel confident, you will start looking for Lamborghinis and Ferraris and popping bottles. Yeah, I've been there, right? So I know this feeling. Your aura will start, having a frequency of making money. I'm gonna make money. I'm gonna make money. I'm gonna make more money. That like leads you to overconfident. So when you're starting becoming overconfident, you're gonna trade not a plus setup because you're feeling overconfident that you know what you're doing, and then suddenly you have lost like 10% of your account, and you're fucking like, okay, I'm gonna show them how it's working. Risking 20% on an A plus setup, and boom, it was the time you would lose the trade because it's probabilities. And then you were like, what the fuck is happening? Gonna risk all of my account the next trade and make what the money that I lost back. I know how you're thinking because I used to think like that. Like 1,000 people that I have personally trained the last 5 years, they used to think like that. Okay, so you are gonna oversize your position after every win, and this is really important to understand that after a losing strike, the feeling is not that dangerous as after a winning streak. Let's talk about revenge trading. Revenge trading is actually gambling. You cannot overcome the huge pain that you're feeling after a losing trade. I cannot suffer this again. I'm gonna make my money fast again. Your ego is talking. And you cannot suffer your own pain. You cannot stay and say, yeah, I lost the fucking trade. Did I like that? No. Of course, I don't like losing. But I understand that losing is into the fucking game of trading and investing. If you cannot like handle that, get the fuck out. You're not gonna be a trader. You cannot flip a fucking switch and say, okay, right now I'm gonna trade like a robot. The thing is that you have to understand how you can stay long enough into the game without blowing an account. Do not think about doubling your account every year or tripling. I don't know. Like, just try to stay long enough into the game. This is the thing. Let's bet, like make a bet with yourself for a year to understand how your mind and your characteristics and your personality works under fucking pressure. Okay, this is a challenge that I would say to you. And the last but not least is the analysis paralysis. Okay, over analysis, over paralysis. This is something that is happening to the emotional kind of people, the people that they don't have a belief or into themselves, or they don't have like a high self-esteem. They're over-analyzing the charts and they're afraid of taking a trade because they cannot suffer the feeling of having a loss because they believe they're making a mistake. You're not making a mistake actually if you're having a loss. A loss is into the game. You have to lose. Actually, you have to build confidence through data. Okay? And to create data, you have to trade. So if you are not confident yet and you don't have a self-esteem, that's okay. You can gain that back. Just trade on a demo account or trade on an account that you don't care about losing the money. Everything starts from that. Okay. So let's breaking down the cycle to sum up. So we need a strategy. We need a proven strategy that works. Strategy by itself doesn't work. You need a system. And to measure that, you need data. And after you gain confidence, you start being consistent. When you start being consistent, life changing. Everything is changing. Like your mind, your trading status, your bank account. So losing streak, okay, do nothing different. Your system has the data. The string is a sample. It's not a signal. Okay, execute the next setup. Do not panic. Okay, just execute the next setup. Winning streak. Great. This is where overconfidence is built sometimes. Okay, don't size up. Don't take extra trades. You don't need to. The system that won the last 5 wins, it's gonna win the next 100 as well. It's alright. It's part of the system. Fear of execution. Okay, sometimes happens that as well. You don't have enough data yet. This is why you don't feel confident. It's alright. The solution is more forward testing on demo. Just try simulators, demo accounts. Do not try to buy fucking funded and feel stressed. If you're emotional after a loss, journal it, okay? Sleep on it. Don't touch the charts. Like, go for a walk. Go like to the sea. Go to the mountains. I don't know. Do something else. Go work out. I don't know. Whatever. One trade does not change your strategy. Okay. So the real reason is that everyone knows what to do. And I know that you know what to do. But why aren't you doing it? Right? That's the question. Like most traders sacrifice long-term gratification for the short term. They feel they need money now. And this is actual trap. Forget about money. Forget about the result, the outcome. Just focus on the journey. Focus on following your plan, your strategy. The patience always will be greater than the strategy. Always. Like a patient trader will be much better than best strategist trader. I didn't withdraw. I didn't buy a car. I didn't buy the house. I kept compounding. That's why $500 became 1M. So guys, for one more time, I hope I give you some value. I spent like a few hours to create that for you. And I really appreciate if you watched till now. But I know that all this kind of stuff is hard. Okay, it's hard for a trader to put them down. If you need my help, just book a call. Okay, I will be glad me and my team talk with you. Thank you. I appreciate your time.